We are all in limbo right now, and many of you guys are wondering what's going on with the economy? What's going to happen to the housing market? What's going on? What does the Fed's 0% interest rate mean? Are rates going up or are rates going down? What does this mean for my home sale? What does this mean for my home loan? What does this mean for my refinance? What does it mean for my home search? These are all questions that you guys are wanting to know. These are all great questions, and in this video, my colleague Ebony Hicks and I, as well as our little mascot Mason, are going to be interviewing Brandon Carroll with RPM Mortgage. He is an expert in the mortgage industry, and he's going to answer all these tough questions for you. So let's get to it.
Okay, hi everyone. This is Rachel and Ebony here today from Keller Williams. We're real estate agents with Keller in the Bay Area. And today we have Brandon Carroll with RPM Mortgage, who is an expert in the mortgage industry. We work with him a lot in the Bay Area, and he's going to be answering some important questions that you guys have had for us. So thank you, Brandon, for taking your time to chat with us today.
Thank you for having me. This is fun. It's nice speaking to real people for once instead of the mirror. So yeah, I'm excited. Let's do this.
Awesome. So we have a couple questions. I'll have Ebony go ahead and get started on the first one.
The number one question we've been getting is, what is it, the whole thing about the Feds bringing the interest rate down to 1% mean for everyone?
0%.
Yeah, so that was that's kind of like what kick-started this whole situation that we're under, because basically everyone, when they hear the Fed lowered their interest rate, naturally and rightfully so, assume that it applied to mortgage rates, right? So the Feds reduced their interest rate twice this year. Mortgage rates on their own since January 1st were already low to begin with. I mean, we were talking like the threes, and they were already low. It's just no one really knew about it except for my past clients who I was reaching out to, right? And so when the Fed reduced their interest rate, all of a sudden there were these headlines left and right, and everyone was like, mortgage rates are dropped, and any lender probably had their phone blowing up like 30 calls the next day, right? And the same conversation was, the Fed's interest rate does not directly impact mortgage rates. They're two separate entities. So when the Fed lowers their interest rate, they lower it because the economy is somewhat suffering, right? The stock market was tanking, bond market was doing awful in that sense. And when they lower their interest rate, that's so that large entities, large banks, they borrow from the federal government. And so more or less it's a steroid to the US government in that sense. Mortgage rates are more so fueled by the employment rate and more so the bond market in that sense. So with them already being low, and then the Fed basically announcing that they lowered their interest rate, it was kind of a misguided way where all the eyes of Americans went straight to mortgage rates that were already low. But because of that, there became such an influx into the actual banks taking on refinances that it was almost an overcapacity for what they could take at the time. And I can dive into a lot of reasons why recently, a few weeks ago, mortgage rates actually shot up a great deal over a 48-hour span. But basically, it was a sense where there were so many deals coming through. It would be like if you built homes, right? And this is the analogy I use. You built homes, you're a builder, you did 3 homes a month, and that was great, right? And then one morning you wake up, there's 1,000 people knocking on your door at your office saying, I want a home this month, right? You're like, bring on the money. Sounds good, right?
Right.
But you can't hire enough people to do that. You can't facilitate that. It's not a realistic situation. And so everyone was just flooding in from an operational standpoint. They could not take it on, right? The other big item with why mortgage rates shot up very recently too is a thing called an EPO, or an early payoff. So whenever a mortgage bank facilitates a loan and they close on it, if a borrower happens to either refinance or sell within 180 days after they close in that refinance, the banks get nothing, right? So if you put yourself in the shoes of an investor, right? I refinance you, we close, mortgage rates are incredibly low. They're looking like they could go even lower. What's to say a client that you just closed on their refinances in 2 weeks, right? And then these mortgage banks pay 1 to 3% of the loan amount just to facilitate creating on their end the refinance. So it would be implosive for investors to be able to do that. So it was just too much all at once. And it all was sparked basically by the Feds lowering their interest rate. And then all of a sudden, Americans thinking that was directly applicable to mortgage rates, which they were already low, but it was all eyes on it and everyone making that assumption, right? The analogy I use too is the whole Trump situation. When everyone went on Facebook and they saw headlines left and right that Trump was impeached, and everyone was like high-fiving. They're like, he's out of here, thank goodness. And then like you slowly realize like it was just a House vote, right? He wasn't impeached. He was voted impeached, but he was not impeached. Federal Reserve lowered their interest rate. Mortgage rates were already low, but they weren't directly correlated. It's just everyone couldn't stop talking about it.
Okay. So you kind of answered the next question for us that we had. Do you think that rates are going to continue to go up? So you kind of answered that a little bit, but do you want to touch on it a bit more?
Yeah. So I think there's two very big parts to look at everything right now, and everything is unbelievably volatile. By the way, like we get updates almost on an hourly basis right now of repricing situations right now for interest rates. And there's a lot of different factors that are playing a part. Before the whole pandemic episode, it was exactly what I went over, where the Fed lowered their interest rate. People thought mortgage rates, they were low, huge capacity, the biggest capacity that's ever been documented of incoming deals to mortgage banks in America. Post-pandemic, it's a very unique kind of world that we're living in right now, not just naturally because I'm at home right now,
Right.
in the sense that the Federal Reserve, not because their interest rate right now, are trying to help mortgage rates. What they're doing is they're buying up, or they did buy $250 billion in mortgage-backed securities. Mortgage-backed securities basically fuel mortgage rates, and necessarily like what we're looking at with the bond market. So when there's more value with mortgage-backed securities and the bond market's doing well, naturally, that means that mortgage rates go down. And so to help stimulate that, to help bring mortgage rates down, the Fed bought $250 billion worth of mortgage-backed securities, because in their eyes, what they're wanting to do is stimulate the economy and bring it back down. So that's how they did it. But in the same sense, on the other side of it, and it keeps going, the Fed on one side and then mortgage investors on the other. On the other side of it, with mortgage investors, it's a very unique time to be lending right now, right? And it's a very sad time to be lending, specifically with what's happening with employment right now. So with that said, all indications are going that mortgage rates are naturally going to go downwards, but investors are pushing back, right? Because their pipeline is still so full from these refinances that came in February, right? That they're still trying from an operational standpoint to clean out that pipeline instead of dropping mortgage rates back to where it was again. And then we're back where we were in that sense. And then there was that whole fear of the EPO thing, where if they drop those, right, who's to say that people aren't just going to keep refinancing? And these mortgage banks are going to be spending thousands and thousands and thousands of dollars on nothing. And then it absolutely goes to nothing. And then the added layer on top of this is when you think about a mortgage investor providing a loan, they have to sell that loan on the secondary market. Right now, no one really wants to buy a risky loan, meaning it's hard to put it in a sense, but a lot of investors are holding off with facilitating the more non-20% down, 800 credit score. Like RPM, one of the great things that we have are jumbo non-QM loans, which are a little outside of the box, like 2.5 million purchase, 5% down, no mortgage insurance. Like that's a non-QM loan. Also very risky somewhat if you're buying that, right? And if you're trying to buy that right now in this environment, you really can't service that type of a loan because everyone's very fearful of what's going on. So there's a lot of pullback as investors go, as far as how are they going to sell this loan on the secondary market? And these riskier loans are having a tough time matching the pricing of bringing down interest rates. So that's why there's pushback too. So pushback because of EPO, pushback because they're worried about how they're going to sell these loans with no one really wanting to buy. Everyone's just kind of in a holding pattern right now, specifically with the riskier ones. And in the long run too, they have to clear out this pipeline that came in just a month ago. And it's a pipeline that came in of the most mortgage-backed securities in the sense that everyone also was told to go home too, from an operational standpoint, right?
Mhm.
So you have 1 month, them get mortgage banks getting the most deals they can possibly facilitate from an operational standpoint, and then the next month told pack your bags, you're not allowed in the office, but you still got to like clean out this pipeline. And then the Fed is going, guess what? We're going to buy $250 billion in mortgage-backed securities, so we can, stimulate and lower interest rates. And everyone is just like this, right? It's a bit crazy right now. But to answer your question, my long-winded tangent answer that I just threw out there, because there's a lot, I could go on forever.
Yeah, no, I know it is a lot, and we're all in a very unique situation. We have a little mascot here, obviously, that's in our our office.
I'm sure he loves hearing about mortgage-backed securities. He's like,
he obviously does like them a lot, I can tell. But yeah, they are going to go up. We just can't obviously predict anything because it is a very uncertain time right now.
I very much think that they are gonna be low, and they're gonna be lower than they've ever been for probably the upcoming next 2 years.
Okay.
The reason being is this situation with this whole pandemic and everyone being quarantined, it's going to pass, right? But the effect that it's had on Americans and employment, that's not going to be recouped easily, right? Like I've been calling up with past clients, the amount of people I'm hearing are either got laid off, receiving no income, that type of a situation. That's going to be a wave that's going to last a bit, right? And I think mortgage rates are going to reflect that as such, as being low and low for a good amount of time, because I think that's going to be the biggest indicator here after we get out, I think, of the storm that is us right now in this pandemic and being at home, is going to be the effect on the U.S. economy, is what's happening to employment. I mean, because no one could prepare for this, right? And it's one of those things where naturally I think that's going to follow suit, but right now it's just left and right. I would say right now, like as of today, mortgage rates are somewhat in the middle. 3 weeks ago, they shot up to the high fours, like low fives at a cost. It was 48 hours, just craziness. Now we're somewhat in a middle ground, like low fours, high threes in that situation. But moving forward from here, as far as interest rates go, it's not going to be what it was where we were sitting at like 3% for a month and a half, right? What I believe is going to happen when I'm relaying to clients, at least refinance clients and applicable to purchases somewhat, is that it'll probably be a bit of an up and down, but not really a holding pattern. That's why we're stressing clients to like get docs in now, just be prepared.
Okay, that kind of leads into our next question then.
I was going to ask you, I'm sure your phone's been blowing up. So what advice have you been giving to, people that are looking to buy or sell or refinance? Like, is it still a good time now, or should they hold off?
Yeah, and I'm bringing up refinances, and you're real estate agents and I'm lenders. We should be talking about purchases and sales.
It's all good. It's all applicable.
Yeah.
Yeah. With purchases and sales too, that's also the very unique factor in this sense where I think anyone would naturally say, and same with you as knowledgeable professionals on the real estate side, is that pretty much everyone's in a bit of a 60 to 90 day holding pattern, it feels like, right? Where it's like, let's just kind of get through this in the sense. There are also people buying and selling right now, because at the end of the day, people are going to have to buy and sell. I had clients a couple of days ago who went into contract, who got a deal that they would not get any other time, right? They got a seller credit. And I mean, they love their home. Did they have to look at it virtually? Yes. Are the circumstances very different? Yes. But they wanted to buy, the sellers had to sell. They got a great deal. And in that sense, the biggest thing where people ask, should we buy or sell right now, or should we hold off? This is going to pass. And in 60 and 90 days, when it does, so is going to pass everyone holding back, meaning that I believe that there is going to be a whole lot of inventory and a whole lot of buyers, right? And you think on the selling side of things, it's not an ideal circumstance, but if you're wanting to get the most out of it, and depending on how many homes come on the market right when everyone kind of eases out of this type of a situation, there's less competition on both sides because there's less people out there. I just think that now, if you're looking to buy or sell, being prepared for that right circumstance where the puzzle pieces fit together, right, and everyone's a little bit transparent with one another, it's almost like it's almost, I think, being transparent in the sense that we're in a pandemic. It's not your normal market type of a situation. You know what you want. We know what we want. Let's make the transaction work is going to be very different than when we come out of this. And it's the summertime when kids are, getting out of school, which is obviously, as we know, very, our market is very seasonal in that sense. When you have a whole lot of listings out there and you have a whole lot of buyers, and it turns to a multiple offer situation for buyers and they're competing, versus right now with these circumstances, keeping an eye out for those potential options where you're not going to have anyone really competing against you, right?
Right. Okay, yeah, that was really good information. I like to ask this question because I know it comes up and I'm sure people need to be educated on it. So this is kind of a more of just an educational question sorry, Mason. Basically, can you explain how lower rates affect the price of homes and what this means for buyers and sellers right now?
Yeah, so naturally when rates drop, it usually follows suit as a bit of a stimulus to the market, right? Because it means that people can afford more, right? So there's more buyers out there, and naturally it usually pushes home prices upwards type of that situation. And it stimulates more interest among buyers because it becomes very cheap to borrow money for something that's a natural necessity that has just shown to gain in equity. I mean, even out of the recession in 2008, that was a circumstance that the likelihood of something like that happening again, in the sense that you could literally walk into a bank and say, I make $50K a month, and be like, great, here's your pre-approval letter, go buy a $2 million home. And I'm sure you probably know that,
Right.
Sometimes people lie when they want things, right? Sometimes, we really want that home. You might really think you make like $50K a month when it's really $10K, right? And that's what happened. People defaulted. There wasn't due diligence up front. That's why we ask you for, arm and a leg and a firstborn. And, I tell people, you're going to hate me, but we're going to get through this together for the amount of documentation that we require. But that's because of what we saw before. So I think the recession is a bit of an outlier because there was just no one governing ability to pay back the loans that people were getting. In this sense, we're still highly documenting everything, as I mentioned, to a point where it's an arm and a leg situation. It's just, we have an unprecedented situation with this pandemic that no one's seen before, but I don't think it's going to have an impact necessarily on the housing market for value that was comparable at all to 2008. Where that's going to be, I don't know, but everyone is still very active. And at the end of the day, I always like to say, it can go up and down, but the trend is always upwards, right? You're going to see ebb and flows, but it's always still upwards.
We're definitely in a unique situation right now, for sure.
Very much. Yeah, very much. But buyers are going to buy and sellers are going to sell.
Yeah.
Right. I know that sounds so simplistic. And even when I hear myself, I'm like, you sound like an idiot. But in the same respect, it almost becomes, I've always kind of learned that like talk overshadows actual fact, right? In the sense that you often hear so many people talking about what ifs and what could be's and where's it going to go. I mean, I have some clients who are still worried about a recession coming in. I've been speaking with them for 5 years now, right? And you think about the amount of time they are still wasting on rent just out of fear of something that's not real.
Yeah.
I mean, it could be, it couldn't be, right? But it shouldn't impede what you're doing presently based off non-real factual knowledge that it's going to occur in that sense.
Okay. you want to dive into the last question?
Yeah, since we do have the shelter in place going on right now, I know as realtors, our business has been kind of put on hold. We've had to, strategize how we do things now. I mean, are you still open for business? Like, is the loan process going to take a little longer now?
Yes, we are still working. My team and I, we're all working remotely. Luckily with RPM, I mean, we've gone through the previous recession, made it out on the other side. We're a private mortgage bank, so it's a circumstance where all we do is mortgages. It's our lifeblood, and we take that very seriously. And we're all in close communication about everything. And we are still working. From a pre-approval standpoint, they're still being turned out very quickly. I usually say pre-approvals are usually 2 to 3 business days. The only thing that holds that up is any verification forms that we may need. And right now, we usually have to get those through payroll or HR departments, and they are obviously just like all of us, a little bit with their arms tied behind their backs. Yes, we're still working, but we're all a little bit more transparent with one another, and as well as both of you, Rachel and Ebony, if we were in a transaction together and you were listing agents and I was on the other side with buyers, it would be one of those senses where we might be a little late on timelines, a day or two.
Makes
but
sense.
if we can all be on the same, like I was using an analogy with a listing agent the other day, just trying to get this across, where it was like prior to this whole pandemic situation, it was like mortgage banks were driving a Lamborghini in the fast lane going 100. And right now, all of a sudden, from an operational standpoint, they're saying, all right, you're going to have to drive a Dodge Dart, right? Like,
yeah. And Pinto.
we're not going to get there as quickly as we were beforehand, right? But we're pushing it as hard as we can, and we're going to get to the destination.
Right.
And if it's about the end goal, which is home ownership or selling your home, we'll get there and we'll get it done, and we're all moving as fast as we can. But rightfully so, very abruptly, everyone was told, get out. So, you know what I mean?
I do. Yeah, we know. We're still operating in business too, but we're exactly like what you just discussed,
Yeah, it's just setting the expectations, right? The easiest transactions come with the closest amount of communication, and everyone being on the same page, that expectations are on the same level playing field. And that's what I'm trying to get across with everyone involved, with my buyers, with my buyer's agent, with the listing agents on all transactions. The end goal is a smooth process and getting our buyers in their home and our sellers selling their home, and that's what we set out to do. So, but probably the qualifying environment, it's also very unique right now. And there hasn't really been a lot shared about that right now, because we were just told on Monday type of a situation where it's just kind of unraveling. But Fannie Mae and Freddie Mac, who back all conventional financing, rightfully so, people are thinking, okay, I'm not working. What does that mean for qualifying, right? Like, if I'm not receiving income, can I qualify to own a home type of a situation? And so Fannie Mae and Freddie Mac basically came out and said very much along those lines that in order for if you're buying a home during this pandemic, during this quarantine, and we can't document via pay stubs that you are actually receiving income through this, they can't lend, right? They can't lend and finance, you purchasing a home without the certainty of knowing when this is going to end, the certainty of knowing when you're going to start receiving income, and be able to move forward. So that's also one thing that's kind of been a curveball in the situation, where with anyone right now who's thinking about offering, who I maybe pre-approved a few months ago or we haven't connected lately, the first question is, are you receiving income at this time? Like right now through this pandemic, are you receiving income, or has everything been halted? Because that's kind of the new world that we're living in, and it's the new guidelines that they set in that circumstance. So also big thing too, and it goes back to refinances, but specific to this pandemic, is everything with Gavin Newsom, right? And these headlines of this 90-day relief situation for your not paying your mortgage. I'm very fearful. And I'm very fearful in the sense that, going back to people reading headlines and assuming it means something, right, rather than what it means, is that this relief program, you have to be approved for it. You have to reach out to your servicer, and you have to make sure that it's allowable. And I think a lot of people are going to read these Gavin Newsom headlines and seeing this 90-day relief and just assume that they don't have to make their mortgage payments and everything's going to be fine, right? And then next thing you know, they miss 2 mortgage payments, hugely impacts their credit scoring. And then when these rates drop, as crystal ball hopefully expect them to in the near future, they might not even be able to qualify for a refinance because they missed back-to-back mortgage payments, right? And they didn't even know about it because they assumed that there was this relief going on. So that's very much, type of the point I want to get across, because that's a circumstance we don't want for anyone.
Right. Okay. Well, I think we can always just reach out to you with questions and people if we want to get them pre-qualified, to potentially purchase. But I think that's it for us on our questions. That was a lot of information.
Thank you so much.
Yeah. Thank you.
Right? The pre-approval process, the point I always like to make too is that, it's non-binding, no cost. It's a little bit of documentation and an application. And some of us have a little bit more time now, which is nice to be able to get started. But for underwriting purposes, documents are valid for 90 days. But, with the clients I work with, we just want to make sure that if time has elapsed, we're able to just verbally make sure that everything is in line and that everything looks okay. So it's not about restarting the process. I think a lot of people think there's a ticking time bomb where if they start, they have to do it in this amount of time. It's not necessarily the sense. So I would say being prepared up front and getting pre-approved is hugely beneficial. And that also goes back to the other side of it when we're talking about buying and selling in this market currently as well. On the flip side of it with sellers too, most sellers are probably going to buy, right? And unless you're buying all cash, you're probably going to need to get pre-approved as well for your financing. And another thing that's kind of nice about this market with there not being as much out there, right, is that if you're a seller and you're thinking about being a move up buyer from there, right, you're trying to buy a larger home and it might be a contingent situation. When it's a very hot market, I mean, I hate to say it, but a lot of people look at contingent offers and they go, you're right. You kind of like laugh at it type of situation. Yeah. It's sad, but I mean, it's the truth. It's because there's more, moving parts involved. But who's to say right now, if you're thinking of moving up, right, and selling your home, make sure you're pre-approved. Right opportunity comes up where no one's jumping at it because no one's able to walk out their door. A lot of people are, but in that sense, you could potentially get these somewhat contingent offers. It's sometimes offers in a hot environment that wouldn't even be, taken into consideration as something that could definitely be worked out, as long as, you're working with like talented real estate professionals like both of you, and you have people in communication on both sides of it and making transactions work. It could be really financially beneficial to take advantage of that right now.
Which is why we always are trying to educate people so they know how to make the best decisions. And that's why we have people like you to help us. So thank you, Brandon. I really appreciate it.
Wow.
Great info. Thank you, Mason, for being so good. All right, Brandon, thank you so much for helping us today. A lot of really great information for our clients. We really appreciate it. We're going to have all of his information below, so you can ask any other questions, meet with him, get pre-approved, go over any kind of questions that you may or may not have, and really appreciate it, Brandon. Have a great day.
Thanks for answering all our questions.
It was a pleasure. Thank you, Rachel. Thank you, Ebony.
All right, bye.
Bye.
All right, so there you have it, a ton of information. Thanks so much, Brandon. There's still so many transitions and changes to come, and we promise to keep up to date on all that stuff. So if you have questions, reach out and we'll get them answered for you as they come in. Brandon's info is down in the box below, so feel free to email him or email me, and we can get everything that we can answered for you answered. As soon as those changes come in, we're on it. Make sure to subscribe below, click that bell to get notified every time I have a new video coming out. There's going to be lots more coming up about the East Bay and all the changes to come. And definitely check out our KW app so you can start searching for your dream home today. Link for that is down below. That's it for this video. If you thought this video was helpful, make a comment down below. And if you'd like to share this with someone, if you think that they're going to be interested in learning about mortgages and what's going on in the market, feel free to share that with them. And in the meantime, thanks so much for watching, and I look forward to seeing you in our next video. Thanks. Bye.